So we have 2019 section 1. So for section 1, they said we have question 2. So for section 1 in 2019 past paper, we have question 2, question 3, and question 9. So we're going to start with question 2. They said name 3 categories of industry and give one example of an occupation in each. When we talk about category of industry, we're simply talking about the sector of the economy within the country. So we have the primary sector, we have the secondary sector, and the tertiary sector. So example of the primary sector is farming, the farmers. The secondary sector are those in construction, and the tertiary sector, banking, education, tourism. These are the tertiary sector. I think those ones are clear. So we have the primary sector here. We have the primary sector, the secondary, and the tertiary sector. Here we have farming. Construction. Construction is in the secondary sector, and tertiary is service sector, which is, we could say, banking. So the meaning of each sector, when we talk about the primary sector, we're simply talking about the sector of the industry that deals with the extraction of raw materials. Then we have the secondary sector, which deals with the conversion of raw materials into finished goods, and we have the tertiary sector, which is the service sector. The restaurants, the supermarkets you go to are part of the tertiary sector. I think that's clear. I'm just quickly going to show you guys what I just did now. So these are the sectors of the economy: primary, secondary, and tertiary. I'm not going to be showing these anymore because I have them on the YouTube already, so you can watch. So I will be conversating here. Okay. So it's just going to be about the conversation. So you have to listen. And if you have the question with you, we're still on section 1. Question 2 is done. So we have question 3 now. So we have question 3 is done, right? So we have question 3. For question 3, it's about finding the meaning of some words. We have payee, USC, PRSI, DIRT, CGT. So the first one is payee. When you talk about payee, we're talking about pay as you earn. Pay as you earn. Payee is pay as you earn. Payee is pay as you earn. As you earn. Pay as you earn. Pay as you earn. Payee. Then we have the universal social change, USC. Universal social charge. Then the third one, the PRSI, we call it pay-related social insurance. It's for insurance. Pay-related social insurance. It's for those. And we have CGT, which is capital gain tax. Capital gain tax. So those are question 3. We have it here. Question 3. It's on YouTube already. Question 3. DIRT, yeah, I'm leaving that. Oh, deposit interest. Deposit interest. Return tax. That's DIRT, deposit interest return tax. Those that pay the DIRT are those who save. It's for the savers. So when you save, the interest you get on your savings, because interest rate is the cost of borrowing and the benefit of saving. So the benefits of saving, you have to pay taxes on it. The kind of tax you pay on savings is called DIRT, deposit interest return tax. So that's about question 3, which is done. Question 2 is done. Question 3 is done. We have question 9. We have question 9 for this past paper. Question 9. So for question 9, they said, illustrate your understanding of a cooperative relationship between an entrepreneur and an investor. When we talk about cooperative relationship occurs because both parties have a common goal, and it's a win-win situation. So the relationship between entrepreneur and investor, an entrepreneur is the individual who has the idea to set up a business. An investor is that individual who has money, or that financial institution that has money to give out to an entrepreneur. So the relationship between an entrepreneur and an investor is a cooperative relationship. Are you with me?
Yeah.
So they said, illustrate your understanding of cooperative relationship between an entrepreneur and an investor. So the relationship between an entrepreneur and an investor is a cooperative relationship. And when we talk about cooperative relationship, we're simply talking about a relationship that brings about mutual benefits. What do I call it? Mutual benefits. And here I wrote, the relationship between entrepreneur and investor is a corporate relationship, which is a win-win situation. That's why I call it mutual. The investor provides capital necessary for the entrepreneur to use to develop a product, for the which profits will be made as a return on investment. So as an entrepreneur, you have the business idea, you have the business mindset. What you need to do is seek for investors who have the financial capability to give you the money. So you have the business idea, you want to produce a product, but you don't have the financial capability to produce, execute the project. So all you need is an investor who has money. It could be individuals, it could be banks, it could be financial institutions. They are financiers. So they have money to lend out to who needs it. So the relationship between an investor or a financier and an entrepreneur is a cooperative relationship. So both of them wants to make profit. So the investor has money, the entrepreneur has idea. So they are combining. That's a cooperative relationship. So they are coming together. The entrepreneur would use the business idea to produce a product. The financier or the investor would give the entrepreneur money to execute the project. Then the entrepreneur will be able to sell the product or service, which comes with profit. Then as soon as profit comes in, the return on investment is profit. So it's a win-win situation for an entrepreneur and an investor. Do you get the point there? I think it's clear. So let me just write it out, illustrating it. So cooperative relationship exist between entrepreneur and investor. As investor would provide funds for an entrepreneur to execute the project for profit. So the reward of an entrepreneur is profit. Now, for an investor, the reward for an investor is return on investment. So return on investment and profit are what? Rewards for both of them. So it is a cooperative relationship. And for every cooperative relationship, it's a what? A win-win situation. I think that is clear. It's a win-win. So cooperative is what? Win-win relationship. I think that point is clear. Relationship. So go to question 9 is done. So we have section 2. So there's a case study for section 2. I'm going to read out and you're going to listen to that. Emma Daly worked as an operations manager in the catering section of a major airline for many years. In 2020, she married John, an architect, and settled into his family's farm in North County, Dublin. Emma became frustrated with the limitations of working for other people. Here, look at what they said. Emma became frustrated with the limitations of working for other people. So she felt she could do her own thing. She wants to become her own boss. Now, so wanting to become your own boss is a skill, is a zeal for an entrepreneur. So it's one thing, it's part of the benefits you enjoy as an entrepreneur, being your own boss, independence. That is what it means. So Emma is frustrated here, right? Emma became frustrated with the limitations of working for other people. In 2015, she resigned from her job to go into business with her husband. Resigning from your job is a risk. So Emma is looking, the way things are, Emma is just like an entrepreneur who can take a risk, because when you leave your job to start your own business, it means you are taking a risk. So risk taking is part of the characteristics of an entrepreneur. Are you with me? So a change in the law allowed for private venues to be used for marriage ceremonies, inspired by her own wedding. So she was inspired by her own wedding. That's inspiration there, you know. Okay, Emma realized there was potential to start a business providing an alternative wedding venue. So she saw it that there's a gap in the market. So there's an opportunity to start her own wedding events. So that's innovation. As an entrepreneur, you find the gap in the market and you create a business out of it. Are you with me, please? Okay. So she and her husband converted an old barn into a marriage and wedding reception venue, and some stables were converted into apartments for guests. In 2017, they opened Oatfield Lodge as a unique wedding stables venue. The client list began to grow, and Oatfield Lodge received very favorable online reviews from clients and bloggers on wedding websites. In 2018, the business reported a profit of 100,000. That is the reward for an entrepreneur. Emma's long-term goal is to become the #1 alternative wedding venue in Ireland, where people can get married, have a reception, and stay after the event. Emma is the event manager in the business. She meets with all couples a year in advance of their marriage and discuss different options with them. From this initial meeting, Emma decides the timeline for achieving a unique and personal experience. She must operate within the couple's agreed budget. Emma must also ensure that top quality service is provided. Oatfield Lodge was recently crowned top wedding venue in Leinster. The business has 6 full-time staff and hires part-time staff as needed, based on the size of the event. For the wedding reception, part-time staff are divided into teams and briefed on their roles. A separate supervisor oversees the work for the catering bar and housekeeping teams. As the number of bookings continue to rise, Emma is under increasing pressure to meet the couple's requirement and to operate within the budgets agreed. For a recent wedding, Emma realized that she had underestimated the scope of the work and left herself extremely short on time. As a result, the menus were rushed and the incorrect date was printed on them. This is part of this service. She did something wrong here. And part of the service, the Company Service Act of 1980, you must provide quality service. So she's going out of what the Service Act is talking about here, but we'll go on further. In addition, the couple complained that the flowers used to decorate the venue were not fresh. The wedding souvenirs for the guests were not available on the day. It turned out that Emma had employed a local college student with an interest in photography rather than a professional photographer to take the photographs. Under the Companies Act of 1980, you must employ a qualified and skilled worker for every service you want to engage with customers. So instead of Emma to employ a qualified and expert, she employed a college student who has interest in photography, who is not a professional photographer. We continue. The couple were very disappointed with their wedding album. They posted an unfavorable online review of Oatfield Lodge. Emma is currently carrying out an assessment of practices and procedures with the full-time staff in order to take corrective actions and avoid any further reputational damage. So that is the case of Emma, who is more of an entrepreneur. She does wedding packages, but the recent wedding package she did was beyond expectation of the clients. So there was a negative review of our company, and that could damage the reputation of the business. But she's making amendments to that. We call it damage control. So when you make amendment on your groove, on your mistakes, we call it damage control. Put that in your mind, please. So move on. Now we have the question here. So for section B, for section 2, we have question 2A and C. So we're going to start with question 2A. They said, explain the term entrepreneur. An entrepreneur is a person who takes the risk of setting up a business with the hope of making a profit. That's an entrepreneur. An entrepreneur is an individual. Entrepreneur is an individual who takes the risk of setting up a business, setting up a business with the hope of making profit, with the hope of making profit. That's the first question there. Do you get that? Now, the second question says, outline the benefits for Emma of becoming an entrepreneur. So we're talking about the benefits of an entrepreneur. The first one is independence. Independence simply means you are your own boss. You decide your time, your money. That is what independence means. And based on the extracts, I wrote it out. I said it earlier. An entrepreneur gains a sense of freedom from being their own boss. So you have freedom to choose your time, your money. That's why you are an entrepreneur. So that is independence. So according to the extract, Emma became frustrated with the limitation of working for other people, and that was the reason she resigned from the company. She got frustrated, and as a result of that, she started her own business. That's the first benefit of being an entrepreneur: independence. The first one is independence. I'm going to rub this off so I can write it here. The first one is independence. The first one is independence. It will be there already. So independence. So the first benefit is independence. Independence. Having the freedom to choose your time and money. That is freedom. That is independence. But you have to relate it to the extract. You have to make reference to the extract. According to the extract, Emma became frustrated working for others. Then she set up her own business. I think that point is clear. For accounting, it's going to be videos and live session too. I'm going to do both. So we move on to question. That's one benefit. The second benefit here is profit. So the second benefit of being an entrepreneur is profits that you make as an entrepreneur. So I'm going to write that. Profit. So the second benefit of being an entrepreneur is the profit. Profit is simply the return on investment, the reward for an entrepreneur. This is the reward for an entrepreneur, So according to the extract, she made 100,000 euros, right? I think. Yeah. According to the extract, the earning potential according to the extract, they make 2018, in 2018, they make 100,000 euros profit. According to the extract, in 2018, Emma made 100,000 euros profit. And that is a benefit, yes or no? Great, that's done. Then we have, I think, is it 2 I wrote or 3? I wrote 2. Okay, yeah, 2 is fine. So we move on. It's benefits. So we move on to question. That's question 2A and B. You have it on the screen already, and it's going to be uploaded on my YouTube channel as soon as I'm done here. Then we have question 2C, right? So go to question 2C. Now, it said, do you think Oatfield Lodge, as a service provider, has complied with the terms of the Sale of Goods and Supply of Service Act of 1980? When I was reading the extract, I talked about the Sales of Goods and Supply Act of 1980. That one, you must produce goods and services that has quality. 2, you must provide goods and services with qualified, skilled supply workers. We talked about it, and also we talked about part of the quality, part of the Sales of Goods Act of 1980 says customers have rights. We must not give customers the impression that they don't have rights when they purchase a good. These are part of the Sales of Goods and Supply of Service Act of 1980. So now the question says, do you think Oatfield Lodge, as a service provider, has complied? What is compliance? Compliance simply means you are doing the right thing. according to the law. That is compliance. So, has complied with the terms of Sales of Goods Act or Goods and Supply of Service Act of 1980? No, because the customers complained bitterly about the wedding she planned for them. So, according to that, I'm going to read further. No, based on the following reason. One, all services should be provided with due care and diligence. Every effort should be made to ensure the service delivery is of good quality. According to the Sales of Goods and Supply Act of 1980, all services should be provided with due diligence. And when we talk about due diligence, it simply means you have to put all efforts to ensure that the service you're providing to your customers is of great delivery. But according to this, everything was in a rush. According to the extract, for a recent wedding, Emma realized that she underestimated, going back to the case study here. Yeah, she said, okay. Yeah, according to the extract, okay. For a recent wedding, I'm going to highlight that for a recent wedding, Emma realized she has underestimated the scope of the work and left herself extremely short on time. The couple complained that the flowers used to decorate the venue were not fresh. That is poor quality. Yes or no? As a result, the menus were rushed and incorrect date was printed on them. These are poor service. So, underestimated the scope of the work and left herself extremely short on time. That is a problem. You are supposed to be on time for your work, for your consumers, for your clients. You are supposed to be on time, because based on the Service Act of 1980, there must be due diligence, which simply means you must put effort to be there for your clients. But she did not do that. 2, the supplier should have the necessary skill to provide the service. The person providing the service must be skilled to carry out the service. But here, Emma used a college student. Here they said the wedding event. Okay, Emma had employed a college student with an interest in photography rather than a professional photographer to take the photographs. And that was why the album of the wedding ceremony was not good. That's why the clients were not happy with their album. So Emma did not employ a qualified, skilled photographer. She rather used someone without skill. A college student that has only interest in photography. Having interest in photography does not make you an expert. So she did not comply with the Sales and Service Act of 1980. I think it's clear. Any question about that? So that's question 2A and C done. So we have question 3, right? Section 3, question. Yeah, now we have section 3. So for section 3, for those that are just joining the live session, it's past paper of 2019. Now we are in section 3. So for section 3, are you there? Okay. For section 3, we have question 1A. 1A. So they said, explain the following terms in relation to the law of contract, providing an example in each case. So the first one is capacity to contract. When we talk about capacity to contract, it simply means any human that is of any natural human, in as much as you are not below 18 years old, you are sane, and you are okay you have the ability to enter into a contract. That is what capacity to a contract is. So here I wrote, capacity to contract means all natural persons and corporate persons have the legal right to enter freely into a contract. The only people that do not have the legal right to enter into a contract are those under 18 years, except for certain reason. 2, insane person, someone that is not in the right state of mind. You cannot enter into a contract. And alcohol, someone that has drunk alcohol, you cannot enter into a contract. Diplomats, because they have what we call is it impunity? Immunity. They have immunity. So you cannot hold them against any mistake. They have immunity, so they don't go into contract. And bankrupt person, someone that has been pronounced bankrupt, he doesn't have any money. So why do you want to go into contract with that person? So these are the only people that you must not that don't have the capacity to contract. Aside these people I've mentioned, the rest of the people have the capacity to contract. And what is capacity to contract? You have the legal right to go into a contract. I think capacity to contract is clear. 2, consideration. This refers to the exchange of value. When it comes to contract, there's always going to be exchange of value. So I enter into a contract with my school. So my school has to pay me. I have to deliver a service. That is something of value. That is consideration. So this refers to the exchange of value in a contract. Each party must exchange something of value in the execution of the contract. For example, the agreement between a teacher and the school. The school pays the salary, the teacher offers its service. I think it's clear. The third one is legality of form. For legality of form, we're simply talking about the documents. Consideration is done now, legality of form. We're talking about a document. There must always be a written document, a legal binded document that talks about the terms and conditions of the contract. That is legality of form. I think it's clear. And the last one is the consent to contracts. Both parties must enter the contract freely in their right state of mind without undue influence. You must not put them on duress. It must not be on duress. Duress means you must not put gun on their head to sign a contract. No, you must not put them under any influence. Let them, in their own free mind, free will, enter into that contract. So these are these are terms to a contract. Any question about that? Okay. So that's question 3, section 3, question 1A. Now we have question 2. Question 2B and C. And that's where 2019 is going to end. Question 2B. So let's go to question 2B. Question 2B says, outline the impact of the following economic variables on Irish businesses. Inflation rate, interest rate, employment rate. So we're going to start with inflation rate. When we talk about inflation rate, we can talk about a high inflation rate or a low inflation rate. So here I wrote about high inflation rate. I'm going to talk about both because you might forget about high, then you can choose low. So I'm going to start with high inflation rate. If there's high inflation rate, it brings about a fall in real income level. And which simply means with high inflation rate, the purchasing power of individuals reduces. That's how their real income reduces. They won't be able to buy what they used to buy. So for them to be able to buy what they used to buy, they have to add more money to that. So a rise in inflation rate brings about a fall in real income level. Number 2, a reduction in business competition. Now that there's high inflation rate, consumers will not be able to buy as they used to buy. That simply means businesses will not be able to make revenue as they used to make. And because they are not making revenue as they used to make, they won't be able to make profit. And if they are not making profit, they cannot expand to be able to compete with the rest of the world. So a high interest rate, a high inflation rate reduces the purchasing power of consumers, reduces revenue for businesses, and that would not allow Irish businesses to be able to expand and export goods outside of Ireland. Do you understand? It reduces their competitiveness. Is it clear? The third one, I'm still here. These are the consequences of high inflation rates. The third one is risk of wage inflation. As soon as the inflation rate is increasing, workers in Ireland would seek for wage increase from their employers. And that simply means the employers have to pay more, and that is wage inflation. And that increases their cost of production. So these are the consequences of high inflation rate. Now, what are the positive impacts of low inflation rate? Number 1, with low inflation rate, the opposite of this situation, it increases real income level. People will have the purchasing power to buy more than what they used to buy. 2, it increases business competition. Because people have more money to buy, firms will be making more revenue and more profit. They will be able to expand their business and compete outside of Ireland. And the third one is less risk of wage inflation. They won't have any reason to increase workers' salary because workers would not seek for high wages. Do you understand? That is inflation rate, high inflation rate and low inflation rate. Now go to interest rate. Are you with me? For interest rate, we're simply talking about the cost of money, the price of money, which is the cost of borrowing and the benefit of saving. Now, a rise in interest rate. If interest rate increases, first, it increases the cost of capital, which may deter expansion. If interest rate increases, it simply means the cost of buying equipment with borrowing would increase, and that reduces the purchase of capital equipment. And when the purchase of capital equipment reduces, it reduces expansion. So because people have to pay so much, businesses have to pay so much to buy equipment, because most of the time capital goods are goods that you have to take a loan, you have to borrow to buy. And the cost of borrowing is increasing. If the cost of borrowing increases, the cost of borrowing is increasing. So the cost of capital goods would increase. So firms will not have, and they don't have the incentive to buy equipment for expansion. So expansion reduces in Ireland as a result of that, a rise in interest rate. 2, reducing profit due to higher interest changes and falling sales revenue. Because the cost of borrowing increases, firms that will still want to borrow will have to pay high interest rates. So paying high interest rate is an expenses for the business. And if your expenses is increasing, your profit is falling, because there's an inverse relationship between expenses and profit. So if expenses is increasing for firms due to high interest rates, it means their profitability would reduce. Do you understand the second point here? And the third one, reduces disposable income to consumers, which in turn reduce consumption, lower revenue. Consumers will not also be able to borrow. And because they are unable to borrow, their purchasing power reduces. And if their purchasing power reduces, they spend less to buy goods and services, which brings about lower revenue for businesses in Ireland. Now, this is high interest rate. Low interest rate. For a low interest rate, it increases ability for firms to borrow to expand their operations. So they'll be able to borrow more money for capital goods, which will bring about expansion. And if there's expansion in Ireland, they'll be able to do more exportation. 2, it increases profit for firms, because they have to pay less on interest rates. So their expenses reduces. And if your expenses is reducing, your profit is increasing. And the third one, it increases purchasing power for households. So households will be able to buy more, and revenue for firms would also increase. So that is the consequence of a low interest rate. Now, the last one is employment rate. Employment is simply talking about the numbers of people who are engaged and are paid for the job they do. So if there's high employment rate, it increases government revenue through taxation, because government would be able to charge income tax. Because you are engaged, you pay income tax. That increases government revenue. Do you understand what I'm saying there? 2, it's for firms. Firms will be able to make more profit because people have jobs. When you have income, your consumption increases. Because your consumption is increasing, revenue would increase for businesses. As soon as your revenue increases, your profit increases. And because your profit is increasing, you have to pay corporation tax to government. So income tax, corporation tax increases government taxes. And government will be able to spend that on infrastructure, on education, on healthcare. Does it make sense? Now, a low employment rate or unemployment. If there's unemployment, it means people will not have jobs. And when people don't have jobs, government has to pay unemployment benefit. That increases government expenditure. And that might lead to, it increases government expenditure. So, and that might as well increase government deficit. 2, low economic growth, because output of Ireland would reduce. People do not have jobs. It puts Ireland, the PPC of Ireland or the PPF goes inward because people are unemployed. So that's the consequence of unemployment. I think that is clear. So that's question 2 of 2019, section 3. Now we have the last one, 2B. Now we have 2C. Are you there? Yeah. So for 2C, they said, explain the reason why the Irish government encourages entrepreneurship in Ireland. Why do we encourage entrepreneurship? The first reason why we encourage entrepreneurship simply means you are encouraging people to set up a business. What are the reasons why every government, not even in Ireland, every government would want to ensure that entrepreneurship is encouraged? These are the reasons. Number 1, employment. As more businesses are set up in the country, they employ more workers. That reduces unemployment rates. So employment, more enterprise will result into more jobs available. People will have more jobs because more enterprises have been set up. Do you get that? It's a common sense thing. 2, taxation. The increase in jobs together with business activity will increase taxation revenue for government. When more jobs are available, business activity will increase taxation. As soon as people are engaged, businesses will be selling more. People will have more money to buy. VAT, value-added tax will increase. Income tax will be paid. Corporation tax will be paid. Capital gain tax will be paid. All these taxes will be paid to government, and that increases government revenue. So government would always want to encourage entrepreneurship. The third one, exports. Now that more businesses are coming in, output would increase in Ireland. And because output is increasing, Irish people would not be able to consume everything. They have to export outside of Ireland. And because they are exporting outside of Ireland, that improves the balance of payment of Ireland. More output will be produced locally, which in turn may be sold to foreign customers, exports. So if Ireland is producing more, it simply means Ireland will become internationally competitive. It can sell to foreign customers. And that improves Irish balance of payments. And the last reason why government of any country, not only Ireland, would want to encourage entrepreneurship is that it reduces social welfare payments. If more businesses are set up in the country, they will employ workers, yes or no? Government will stop paying unemployment benefits to the unemployed people. That reduces government spending. And that improves government budgets. So these are the reasons why government of any country, a sane government would want to encourage entrepreneurship. Because encouraging entrepreneurship increases your GDP overall. It improves your country. It develops your country. I think it's clear. So that ends the live session, and that ends chapter 29. Oh, I said chapter. That ends past paper of 2019 for business. Let me just take this away. Let me take it away.